These presentations will work a comprehensive bookkeeping problem both within Excel as well as within QuickBooks. Excel having the advantages of being able to see all the components and how all those components fit together to make the end product, that end product, the financial statements. QuickBooks having the advantage of being able to use forms, simple data input, and an automated system in order to convert that simple data input into the end product, the financial statements. We will work each component of the problem in Excel first and then work that same information in QuickBooks. Hello, in this presentation we will enter bills and pay bills into our bookkeeping problem in Excel, keeping in mind how that same information might be done in accounting software such as QuickBooks. If you would like more information about the QuickBooks Pro, take a look at our comprehensive course in the link below. First, we're going to take a quick look at QuickBooks and then we'll jump over to Excel and enter the same data there. We're taking a look at the snapshot of QuickBooks, the vendor section, and we see the flow chart of the vendor section. That's going to be a very convenient thing within QuickBooks. It tells us the process of how to enter the data. Here we have the enter bills, and then we're going to pay the bills once they have been entered. When we enter the bills, it's going to be a convenient process actually, because we're going to be able to enter as many bills as we want. We can enter them at the point in time that we incurred the bill rather than waiting until we actually pay the bill to put them into the system as we should for the matching principle, because we should recognize the expense when they have been incurred. So we can put them all in the process here. Once we do that, the fact that it says bills in QuickBooks, this form then means that it's going to increase the accounts payable account, and the other side will go to wherever it goes, probably an expense like the phone bill, like the utility bill, and whatnot. Then we can go over here and choose which bills to pay, which we'll do both in this process, and then just pick the bills that we need to pay, and this will then write the check for us for those bills that we need to pay, which will reduce the checking account, reduce the cash, and record the decrease to the accounts payable. Here's what a bill is going to look like. We're going to pay the Verizon bill for, this is going to be our phone bill. We're going to have the date. That's just the end of the month type of bills that we're going to have here. We're just going to enter them into the bills and then print them out in using the pay bills function. We have the amount due, and then we have the expenses, not the item tab, but the expense tab, and we decide what expense it should be. We're going to put this to telephone expense. What will this do? By the nature of it being a bill, note it looks like a check, but this is going to be a bill slightly different. QuickBooks sees the bill as increased in accounts payable. That's what bills do. This will increase accounts payable, and the other side then will go to telephone expense, increasing the expense, decreasing net income. Then we're going to do another bill, and we're going to say this one is going to go to Spectrum for a bill. It's going to be an internet expense. We're adding that account here, and it's going to be the same process, meaning we're just going to enter the data, we're going to enter the amount of the bill, it's going to increase accounts payable, and it's going to increase the internet expense, reducing net income. And then if we did this one more time, we lost the last one, but we're doing it for Edison as well. So we enter the Edison bill. Then we would select the second piece of the process, which is to pay the bills. So once they have been entered, we can select Pay Bills within the vendor section of QuickBooks. Select those which we would like to pay. So we're just going to say we want these three and not that one. And then once we process this, QuickBooks can generate the checks or issue the check numbers, whichever we would like to do, and that would decrease the checking account. So this part, the Pay Bills, then will be decreasing the checking account. We are in essence issuing checks, and we'll be recording the other side to the expenses of telephone expense, the internet, and utilities. If we go back to QuickBooks, we're going to back to Excel. We're going to enter the same data over here. We're going to process these three checks, putting them first into the bills as if we're getting a bill. If we saw this in a book problem, it would see that it would be like we had an expense that we paid for on account, meaning we didn't pay cash for it, and then we'll go through the process of paying on account, meaning we're writing a check for the payable. So we're going to go down here. This is going to be at the end of the month. So we are down here in K20, and we're going to say 2/28 is the date. And then we're going to go back up top, and we're going to ask, is cash affected? First, we're going to say cash is not affected because we're going to say that we paid these on account. Rather than paying with cash, we paid with accounts payable. So sometimes I like to think of what we received rather than think about accounts receivable first or payable first, because it might be easier to know which way the account is going. So what did we get? We got the telephone. We paid the telephone bill, and that's going to be an expense. It's a type of expense down here, so we paid off a type of expense. So if we look for the telephone expense, it's down here. And the reason this might be easier is that we have all the expenses and they all have debit balances, and they only go up in the debit direction, meaning we only pay the telephone company, we only pay the expenses, they don't pay us. And therefore we will do the same thing to it that we always do it to its normal balance, that is to increase it with a debit. So we'll copy the telephone expense and scroll back up, be in cell L20, right click and paste 123. The amount then will be $365. And then we're going to credit something for that same $365. If we paid cash, it would be cash, but we have not yet paid cash yet. Therefore, instead of decreasing the asset of cash, we will be increasing the bad thing, the liability. So this is the accounts payable. We already know that we're going to credit it because we debited the telephone expense. If we double check it though, we know that it has a credit balance. We need to go up. The bad thing is increasing. We incurred more of it, and therefore we will do the same thing to it, which in this case is a credit. So we're going to copy accounts payable, put that on the bottom in L21, right click and paste 123. We have journalized the journal entry in the general journal, and now we'll post that to the general ledger. Before we do, we will freeze the panes going up top to AJ1, and then go into the View tab, go into the Windows group, freeze panes within the Windows group, and freezing the panes. Scrolling back down, we need this telephone expense. There's the telephone expense. We need to post that here, so ultimately it's going to go to the telephone expense here. It's the second to last account on the trial balance, and therefore the second to last account on the general ledger. So we're going to take a scroll to the right. It's going to be assets in green, then liabilities in orange, and then equity in light blue, and then the expense accounts. And we want to be way over here to the telephone expense. We are way over here in BS24. BS24. We're going to say that that equals that 365. That brings the balance up to 365. That should be found on the trial balance. Rather than scrolling all the way back, I'm just going to click right on the left-hand side of the frozen panes, and then click to the right, and it should just pop over there. Scroll back down, there's the 365. Now we will have the accounts payable. There's the accounts payable there that we need to post. Here it is on the trial balance, first orange account on the trial balance, and therefore first orange account on the general ledger. Scrolling to the right to find that first orange account on the general ledger. We see it here in columns AY through BA, and we need to be here on the credit side because this is a credit. So we are on the credit side in cell AZ18. AZ18, we're going to select equals, point to the 365. That should increase our balance from 1,200 by 365 to 1,565. Scrolling back to the left to see if we see that same 1,565 on the trial balance. We see it here in AK13. We also have done something to accounts payable, and therefore we need to track this not just by date of when it happened, but who do we owe. So we're going to scroll all the way to the right, and we're going to find the subsidiary ledger. We're scrolling, taking a scroll to the right. We have to track the subsidiary ledger in a similar way that we have for the accounts receivable subsidiary ledger. We're going to have to add a couple here. So this is going to be first for Verizon. So I'm going to say Verizon is going to be our vendor. We will be on the credit side, so we are in DA16, and we're going to just say that that equals this 365 over here in 21, it looks like. So we're in TA16, and that's going to equal, pointing to this 365 credit, bringing the balance up in the credit direction to 365 for Verizon. Scrolling back up, if we see this is picking up all of the people that we owe money to, and that balance is $1,565, which hopefully matches what's on the trial balance. Let's check it out. To do so, we're going to put our cursor right on the left-hand side of those frozen panes, scroll to the right until it pops over, and there's the amount, accounts payable in AK13, $1,565. Same process we're going to go through for another bill that we will enter for Spectrum. This is going to be for our internet provider. So we're going to say that we have the checking account here is not going to be affected because we're going to enter the bill on account, therefore dealing with accounts payable. But it might be easier for us to first think about what we are receiving, which was internet service. Internet expense is what we will be calling it. Down here we see the internet expense. Like all expenses, it's going to have a debit balance and it's going to go up in the debit direction. Therefore, we will do the same thing to it as we always do to expenses, debit it. Copying the internet expense by right-clicking and scrolling over to L23, right-click and paste 123. The date is going to be, once again, 2/28. The amount we're going to say is for 180. 180. We're going to credit something for the same amount. If it was cash that we had paid, we would be crediting the cash, but we didn't pay cash. What we did instead was put the bill in. That means it's going to be accounts payable. Note we already know that we're going to credit accounts payable because we debited the internet expense. But if we double check that, just to check it in our mind, we see that that's a credit. We need it to go up in the credit direction. So we're going to do the same thing to it, which is another credit. So I'm going to copy the accounts payable, right-clicking and copying. Put that on the bottom in L24, right-click and pasting. Then we'll increase the indent by going to the Home tab, the Alignment group, and increase indentation. Now we've journalized the journal entry in the General Journal, and we'll post it to the General Ledger, starting with internet expense. So that's going to be down here, right there. So it's going to be in the same order on the General Ledger. So we're going to have to scroll to the right again. So taking a scroll to the right, we're looking for those dark blue. There's the assets in green, the liabilities in orange, the equity in light blue. We're looking for the internet expense. Here we go. Scrolling down. We see this here in BO29. BO29, we want to pick up that item in M23. We will select equals and point to the item in M23 and enter. Brings the balance up to 180. We're going to jump back over and see if that same amount is on the trial balance by clicking to the left side of the frozen panes and then going right just a couple tabs, and there is the 180. We're out of balance by the 180 until we record the other side. Note that the expenses are bringing down net income, or in this case, putting us into a loss. This debit balance in net income means the expenses, debits, are greater than the credits, which are income, and therefore we have a loss at this time of $491. We're then going to record the other side. There's the other side to accounts payable. Here's the accounts payable on the trial balance, first orange account. It will then be the first orange account when we scroll over to the General Ledger. Scrolling over, first orange account, there it is. Scrolling down, we are in cell AZ19. AZ19, we're going to select equals, point to 180, bringing the balance up from 1,565 by 180 to 1,745. Scrolling back to the left, we should find that 1,745 on the trial balance right there, so it looks good. Are we back in balance? We are. The debits equal the credits. That looks good. We also need to record this same amount in the subsidiary ledger to the right. So we got it here, and we recorded it also in the General Ledger by date. This is who we owe money to, the vendors we owe money to. We also need that information by vendor. So we're going to take a scroll all the way to the right. We're going to locate those subsidiary ledger, which is going to list the people we owe or the companies we owe or both by vendor rather than just by date. We are way over here in, I just passed it a little bit, but that's okay. We're in here in AZ or CZ to DF, CZ to, those are the columns, CZ column to DF column. And we're going to post this same 180. We need a new vendor. So I'm down here on cell DD13, and we're going to say Spectrum, DD13 Spectrum. We are going to have a credit, so we're on DE16. I'm in DE16. We're going to pick up that 180. We will say equals, point to the 180, bringing the balance up to 180. That 180 then should be found on the trial balance. So we're going to click right on the left-hand side of the frozen panes, then click, actually that 180 will not be on the trial balance. What will be on the trial balance is this 1,745. If I double click on that, that is all of the vendors. So sorry about that. We're going to say that 1,745, that should be on the trial balance. So we're going to click right up to the left of the frozen panes and then go right a little bit, and it should just pop over there back to the cell AK13. There's 1,745. We are back in business. We're going to do this one more time. This is going to be for the Edison bill, and then we'll pay the bill. So it's going to be great. So we're going to have the same date again. It's going to be 2/28, and we're going to pay the Edison bill, or we're going to enter the Edison bill, I should say. Is cash affected? No, because we're doing this on account, meaning it's going to be done in accounts payable. And then I would think about what we received. We're paying Edison. That's the utility bill. So we got electricity. We're going to put it into, we're going to call it utility. Note that we could call these whatever we want, whatever business we're in. We might group the telephone and utilities into just utilities expense, or we might break out utilities into more divisional expenses, might call it the electric expense. But it will be an expense of some kind typically, and that's what we'll be using here, utilities. And it has a debit balance, as does all expenses. It's going to go up, as do all expenses typically do. And then therefore, we're going to do the same thing to it, which is another debit. So we'll copy the utilities expense, put that on top in cell L26, right click and paste. 1, 2, 3. The amount will be for 648. We will also credit something for 648. Then we need to know what that credit will be to in terms of accounts. And it's not going to be cash because we're not yet paying cash. We are crediting instead the liability. Rather than the good thing, the asset going down, the bad thing, the liability, is going up. This is a credit balance. We're going to increase it by doing the same thing to it, which is another credit, in other words. So we will copy the accounts payable, scroll down to cell L24, right click and paste. 1, 2, 3. Then we're going to go to the Home tab. We're going to go to the Alignment group and increase the indentation. And we have now journalized the journal entry in the General Journal, and we'll go to the process this time of posting to the General Ledger. First, we'll post the utilities. That's typically way on the bottom, so it's way down here. It's going to be like the second. It is the second to last account. It's not like the second. It's totally the second to last account. We're going to go all the way to the right then to find it, because it's going to be in the same location on the General Ledger. So we will take a scroll to the right. I'm just holding down the right arrow to go right. And we've gone past, there it is. We didn't go past it. It's right there in BS31. It's a debit over here. It's going to be a debit in the utilities in BS31. We will select equals, point to that 648, bringing the balance up to 648. That same 648 should be found on the trial balance. To see that, we're going to go right to the left-hand side of the frozen panes and then go right, and that should pop us back over there. So I'm just going to click right, and there it is. There's the 648 in cell AK36. Now we're going to record the second piece, the accounts payable. That'll put us back in balance down here once we do that. It's going to be up here. It's going to be the first liability account. There it is. And therefore it will be the first liability account on the General Ledger where we need to post it. So we're going to go to the right and go past the green asset accounts and find that first liability account called accounts payable. There we have it. And we're going to go to the credit side of it, which in this case is in cell AZ20. We are in AZ20, the cell. and we're going to say that that equals the 648. So we're going to say that equals 648 and N24, bringing the balance up from 1,745 up by 648 to 2,393. That same amount should be found on the trial balance. Let's double check that and make sure that it is indeed the case. So there it is in AK13, 2,393. Now we've recorded this to the accounts payable here and the general ledger giving the detail by date, but we also need the detail by person or company who owes us money, that called the vendors. So we're going to do that, we need to go to the subsidiary ledger all the way to the right. We're going to take a scroll to the right to the subsidiary ledgers. Subsidiary ledger is going to be in order by vendor, the people that we owe money to, and there's the subsidiary ledger for accounts receivable, the people that owe us money, and then here's the people we owe us to. We are in columns CZ through DF, and we're looking for, we need Edison. That's going to be a new one again, so we're going to put Edison down here. And we are going to be on the credit side, and we're just basically just posting once again the same thing that we did to the general ledger. So we're just going to say that we're on DA22, the cell, DA22. We're going to say that that equals this 648. So I'm going to say equals, point to the 648 in N27. That brings the balance up to 648 for Edison. And then if I was to add all of them up this time, instead of making the mistake I did last time, then it adds up to 2,393, which should also be found on the trial balance. Let's see if that is indeed the case. We'll do that by going right. I'm going to click right to the left-hand side of the frozen panes, and then we're going to go to the right, and it should just pop back over there. And there it is in AK13, and same amount. Okay, so that we have now posted those three amounts and increased the accounts payable. We're going to go ahead and pay it off right away directly. And you might be thinking, what's the point of that? Why didn't we just pay it off at the beginning? One reason is it might give us an audit trail to go through the accounts payable. It might be easier within the software to put it into the bill and then pay it. The other reason is that in practice, we might not be doing this at the same time, meaning we might just be entering these bills as we get them and then deciding when we want to pay them. And it could be very useful for us to go through the accounts payable in order to do so. So now we're going to actually pay it. So meaning we're going to pay some of this information, picking the bills that we would like to pay. And we're going to do that with one journal entry here, even though it would be for multiple checks. So in other words, we're paying off Verizon, Spectrum, and Edison. In the journal entry format, we are decreasing the checking account and we are decreasing the accounts payable. So we're gonna basically write that in one journal entry rather than three separate journal entries, even though if you were to write the checks, you would write three separate checks. The things that would drive this in the accounting software would be the form of a check, which would drive the journal entry, which would be a decrease in the checking account and accounts payable. We'll note, however, that they are three different people that we are paying off when we record them in the subsidiary ledger. So we're going to go back to the subsidiary ledger and note the fact that we're paying off these three separate individuals. That's how we're tracking within our bookkeeping system who we are paying off. So what are we doing here then? We're going to say that we are making a payment on account. If it was a book problem, it would be something like we're making a payment on account. We're paying off the accounts payable. Is cash affected? We're going to say yes. We're writing checks. And so it's going to go down. How do we make something go down? We do the opposite thing to it, which in this case would be a credit. So I'm going to copy the checking account. We're going to scroll back down. We're going to make a new transaction as of 2/28. The checking account will go on the bottom in L30, right-clicking in L30, pasting 1, 2, 3. Then go into the Home tab, the alignment group, and increasing the indentation. The total that we're going to pay off here, and we could go to the subsidiary ledger and add these up, but we just saw that it's going to be the 365 Verizon, the Spectrum of 180, and the 648 for the Edison, adds up to of 1,193. So we're going to have a credit of 1,193, reducing the checking account. Then we will be debiting something. That debit will be for the same amount. We know that we will not be debiting the telephone expense, the internet expense, and the utility expense, because we already did that up here. What we will be debiting is the accounts payable, reducing the accounts payable. We already know that we are going to be debiting the accounts payable because we credited cash. That's the beauty of thinking about cash first. So now we are going to think through it. However, this is a credit. We're going to do the opposite thing to it to make it go down, because we're paying off the accounts payable, which in this case is a debit. So we'll copy the accounts payable. We'll scroll down. We'll put that in L29, right click and paste 1, 2, 3. We've now journalized the journal entry in the general journal, and now we'll post it to the general ledger, first starting with the top account, accounts payable. That's the first account on the trial balance, and therefore the first account on the general ledger where we need to post it. Scrolling to the right, we see the accounts payable. Scrolling down, we need to post it here in AZ21. So we are in cell AZ21. We're in cell AY21. AY, it's going to be the debit side is the reason. We're on the debit side here. We're on the debit side here. AY21 equals, and we're going to point to that 1,193, bringing the balance down to 1,200. That same 1,200 should be found on the trial balance. Let's see if that is the case. Scrolling back to the trial balance, we see that amount there. Then we're going to pick up the checking account. That's going to be the first account, of course. It's going to be the checking account, first account up top on the trial balance, first account as well on the general ledger. We're going to be crediting it because we're reducing it. So we are in AN16 and 16, AN16. We're going to say that that equals, within AN16, we're going to say that that equals, then we're going to have to scroll down just a little bit and then point to that 1,193. Let's do that now. We are in AN16. We're saying equals. We're scrolling down just a bit. We're pointing to that 1,193 and enter. That brings the balance in the cash account to 103,353. That amount also found on the trial balance, 103,353. And we also need to, however, record this amount that we posted to the accounts payable to the amounts in the subsidiary ledger. And in this case, it's paying off three different things. We're paying off the Verizon, Spectrum, and Edison. So we're going to have to split this amount up into those respective pieces. As we do that, we should bring the subsidiary ledger to match what is on the trial balance, and we should be okay. That's how we are tracking that our books are right, that we've paid off who we should be paying off within the books in Excel. To do that, we're going to go to the subsidiary ledger all the way to the right. So we're going to take a scroll to the right by clicking the right arrow, scrolling to the right to find those subsidiary ledgers. There's our financial statement. There's the inventory. There's the subsidiary ledger for accounts receivable. Here it is for accounts payable. So we're in cells CZ through DF. And of these vendors, people we owe, companies we owe, we didn't pay Epiphone yet. We did, and Fender's already paid off. We're down here in Verizon. That's who we paid. So I can't just post this directly, meaning I can't just take this number and post it as we have in the past, because we didn't post 3 different journal entries, which may have been nice to do to see more detail, but this takes less entries to do, and we'll still track the fact that we're paying off these vendors in the subsidiary ledger. So we're just going to have to put the 365 here that we're paying off, bringing the balance down to 0. We don't owe Verizon anything anymore. Spectrum, 180, bringing the balance down to 0. We don't owe Spectrum anything anymore. Edison, 648, bringing the balance down to 0. We don't owe Edison anything anymore. And we're going to check that that is correct now by double checking that this balance here matches what is on the trial balance over here. Let's do that now. It should be 1,200 on the trial balance. We're just going to click to the left-hand side of the frozen panes and then go right a couple times to see that that 1,200 is there. So it looks good. Everything looks good. What we will do now is unfreeze the panes. So we're going to go up top, we're going to go to the View tab, and we have the Windows group, and we have the Freeze Panes, and we will unfreeze the panes. And then we're going to go and check out what we've done to the financials and see if that pulls over correctly, see if we're still in balance, and see if everything is automated as it should be. We did something to the checking accounts. I'm just going to point to that on the financials. We did something to the accounts payable, so I'll point to that on the financials. We did something to a few expenses, including the telephone expense. I'll point to that. Utilities expense, we did something there. We will point to that. And the, internet expense. Hopefully I didn't put it into interest. I hope not. I apologize if I do. They look similar. And note here that we have a loss. That means that we're having the debits of expenses are greater than the credit of revenue. And we'll see that on the income statement too. So let's do that and let's look at that now. To see that, we're going to take a scroll to the right. We're scrolling to the right, scrolling to the right, until we see the financial statements. Here they are. Here's the cash that's been adjusted. Here's the accounts payable been adjusted. And are we still in balance with the total assets still equaling liabilities and equity? It's all automated, been updated automatically as it would be in the accounting software. We can see here that on the income statement we had the adjustments to these three expense accounts, the internet expense, the telephone, and utilities expenses. That brought the expenses up, which brought our net income down, or in other words, brought the loss. We have a loss here. Note that this represents the fact that we have a loss on the income statement, a plus and minus format. When we had the same brackets on the trial balance, it meant, when we don't have the brackets on the trial balance, it meant that we had that same loss because we're talking about debits and credits. I know that's a bit confusing, but no matter how you look at it, debits and credits and plus and minuses are something that we have to grapple with if we're going to learn the both of them, and getting them mixed up is part of the process. So mull that over, and then we can see that same loss here on the statement of owner's equity, and that is going into the end calculation for the ending owner's equity here of $143,036. That amount found on the balance sheet as well here, part of the end calculation to get the assets equaling the liabilities and equity. Once again, this is all automated in a similar way as it could. Hello, in this presentation we will record the entering of bills and then the payment of the bills within QuickBooks Pro 2018. If you have been working along with us, we will be continuing with the Get Great Guitars problem. If not, that's okay. You can follow along with us entering bills here and then seeing the Pay Bills icon and noting what is happening when 1, we enter the bills, and 2, we pay the bills, as well as some pros and cons in using this function as opposed to just writing a check. If you have the backup file up to this point, you can restore that by going to the File tab and restoring the backup file, that giving you the information up to this point in time, so that we are on the same page. If you've been working through this problem, hopefully we're on the same page as well. If not, then we can follow along with what we have. We currently have the Home tab open. To open the Home tab, if it's not open, you want to go to the Company drop down and Home tab. We also have the Open Lists open over here, so we can see the open windows. To have that open, you want to go to View, Open Window List, so we can toggle back and forth through the open windows. Only open window at this time here is the Home tab. In this case, we're going to be entering the bills. These are going to be the basic year-end bills. We're paying the utilities, we're paying the phone bill, and then we're going to pay the bills. Now this is going to be the normal process when we enter just the bill. That's not going to be the bill for receiving inventory, which might go through a process where we would first have the purchase order and then have the bill related to the receipt of the merchandise. In this case, we are going to be entering the bills for items that will typically be expenses, and then we're going to pay those bills over here. Now, the pros and cons of doing this process as opposed to just writing a check are that when we have the enter bills, we can enter multiple bills at one time, and then really we can choose which bills we want to pay at the end of the month rather than waiting until we actually want to pay the bill to write to the check. If we do that, then at the point of time that we enter the bill, that's when QuickBooks will record the related expense typically related to the bill that we are entering, or an asset if we're making a bill for an asset that we are purchasing. And that's what we really want to happen in terms of the accrual basis. We want to record the expense at the point in time we incurred the activity that we are using up. Typically, that's at the point in time we receive the bill, being closer to when we actually consumed the goods and services, like the phone bill or the utilities bill, as opposed to the point in time when we pay it, which may be the following month. We want to, under an accrual basis, to be recording the expense at the same point in time that we consumed it in order to generate revenue, as opposed to the point in time that we paid it. So that's going to be one benefit that we have to the entering bills. It's also pretty useful for us to be able to enter all the bills and then pay them all at one time. And then if we're processing these in terms of checks, we can print all the checks at one time, which is nice. If we're not printing the checks, then note that we could enter the actual payments of checks here. We can use the write checks here, or we can enter these directly into the check register, which sometimes is faster if we're just entering the checks. And in that case, we would go to banking, use register, check register. That's going to be our main checking account here, and OK. And we could enter the checks here with the check number and the amount. We'll go back here and see what is being generated within the check register. Just note that if you're not actually writing the checks, sometimes using the check register is faster if you just want to enter the data in order to generate the financial statements and get what you need in terms of reporting processes. We're going to go back here in the open windows to the home tab and start entering the bills. So we're going to enter the first bill here. Entering the bills as of the end of the month of February, and the month that we are currently working in. And that is going to be, first is going to be for Verizon. Now note if we select the drop down, we have all the vendors here. If we start printing Verizon, it should then populate, and there's Verizon. There is the vendor. Selecting tab now populates the information relevant to this vendor, meaning the information that we had in there basically last time. So we have Verizon and we have the account. Now we could also set up the system so it pulls in the last amount due within the settings. Sometimes that's useful, sometimes it's not, depending on, if it's the same amount that's going to be due all the time. In order to change the settings, you would go to Edit and go to Preferences at the bottom and look through the settings, and you can change those settings. But it's really nice that it populates, at least in this case, the account that was used last time, and therefore not requiring us to do that again. The date is going to be 2/28/21. We are working in the future. We don't have any reference number. The amount's going to be $365, and the bill date, we're gonna say the due date. We'll keep the due date is defaulting at the 3/10. We're going to keep that. Not going to change the terms. Not going to put a memo in, although it'd be nice if we were to put a memo in. We'll knock on it though. And then we're going to have the account already being selected, the default. If it were not, we would select the account. We'd have to add it. Typically, the telephone expense will be included even if we just created the QuickBooks file and used whatever the default setting. In our case, we use the default list of accounts related to a merchandising company. But typically any default list of accounts will have a telephone expense, so we should not have to create it. And then we have the amount here. Note that we are in the expenses side here, not the items side. If we were on the items tab, we're typically looking at inventory items that we are purchasing. Everything else typically is in the expense side, even if it's not an expense, even if we're purchasing, say, an asset like supplies or like equipment, we will be putting it over into the expenses side. Note that the bill is much similar to a check. It looks really a lot like a check. Most of the data fields will be the same. The difference between the bill, of course, is that once we record this bill, it will not be reducing cash as a check would, but will be recording this to accounts payable. That's what a bill means. It's going into accounts payable and increasing the amount due, in this case to the specific vendor of Verizon. The other side then increasing the expense of the telephone expense, that of course decreasing the net income for the time period it is entered as of that February 28th, 2021. Let's record that and take a look at that. Save and close. We're going to go to our major forms. We're going to go to Reports, Company and Financial, and scrolling down to the balance sheet. Looking first, let's change the date ranges. We're going to go to the date ranges, Customize Report, and the dates are going to be 01/01/212, 12/31/21. So January 1st, 2021 to December 31st, 2021. This is when we will be putting the data in for this problem. Hitting OK. We then have our information, and we're looking at the payable. So down here in the payable, double-clicking on the payable. Scrolling down, we have this Verizon, the name, the split, the other account is to the telephone. Double-clicking on that, we then see our bill. Clicking out of this or closing this bill, closing this window. We also note, and it could be useful to track this by vendor report, going to reports up top, scrolling down to the vendors and payables, and going to the vendor balance detail. We then see here the Verizon bill for the 365, double clicking on that. We see the bill for the 365. Closing this back out, we can then go to the income statement, or the profit and loss as it's called in QuickBooks, and go to Reports, scrolling down to Company and Financial to the profit and loss standard. The dates then we're going to change to 01/01/212, 12/31/21. January 1st, 2021 to December 31st, 2021. Scrolling down to the expenses area, we see the telephone expense. There's the telephone expense, double clicking on the telephone expense. We see our bill here, 365, double clicking on that. We see the telephone expense here, closing this back out, closing this back out. Our net income at this time is a loss of $6,532 within this second month of business. Next, we will go back to the Home tab, and we're going to look at the next bill that we will be entering. So we're going to enter bill. And this case is going to be for the cable bill. So we're going to go to Spectrum, and let's select the drop down. And we don't have Spectrum there yet. So this is going to be for our cable bill, our internet bill, and we're going to select Spectrum to enter the new vendor. And we're going to type that in, and then when we select tab, it's going to say, you don't have this vendor set up, would you like to set it up? And we're going to say yes. Rather than doing the long setup and putting the date and the phone number and whatnot, we're going to do what we need to do just to process the bill. In this case, that is the quick add. We'll set that up. The pay date is February 28th. Once again, we're not going to have the reference number. The amount will be $180. We'll leave the bill due date as the default date, and then we need the expense down here. If we look through the expenses, we can see the list of expenses, this being generated primarily from QuickBooks when we created a merchandising company. If we don't see an expense that we want to put this into, such as office expense for basically the internet bill, or telephone expense if it was grouped with the telephone expense, then possibly we want to have another line item, which we might want to call internet expense. That will allow us to track this separately. Now, it's up to the bookkeeper as to how many expense accounts we want to have. If we want to group that into utilities, if we want to put that into the telephone expense, it's all depends on whether it's relevant to our decision-making process. If we would like to look at this expense in a separate line item, then we can have a separate line item. If we have too many separate line items, then when we look at our income statement, it's a little daunting because we have all these line items with dollar amounts that may be insignificant to decision-making. However, if we group everything into too large of pools of groups of expenses, then we're not really getting enough information to make the best decisions when looking at our income statement. So it's really up to the person putting the income statement together as to how many line items they want to have. We're going to select tab, and it's going to ask us to set this up. So I'm going to select tab. It's going to say, hey, we haven't set this up. Would you like to set this up? And we're going to say, yeah, set this up. And there it is. It's going to default it to the expense. That's what we want. So we will continue with that and continue. And so once again, the expense, same screen, same information. We're not going to put any added description. We're not going to put the tax line in this case. We're not tracking the tax line here. And we're going to say save and close. And what will this do then? It's going to increase the amount that we owe in terms of the accounts payable account for Spectrum in specific, and increase the internet expense account, decreasing net income. Let's say save and close. Here is that process. Then we're going to go to our balance sheet. And if we take a look at the accounts payable, double clicking on that, scrolling down, we see the last check that we have, or not the check, the bill that we have put for Spectrum. Double clicking, there's the bill. Closing this back out, closing this back out. Going to the vendor balance detail. We now see Spectrum here. Double clicking on that. There's our bill. Closing this, closing this. Going to the profit and loss in the open windows. Double checking to see that we have the internet expense. Our new line item has appeared with the 180 in it. Zooming in on that by the double click, we see our 180. Double clicking that, we see once again our bill here. So that's going to be the effect on the financials. Let's do this one more time. That with the electric bill from Edison. We're going to go back to the Home tab. We're going to go to Enter Bills, and we're going to say Edison. So we already have, once again, Edison there. So if we just start typing in, it should auto-populate. There it is. There's our vendor. We're going to select Tab. The date is correct. We're writing them all as of that date, or putting the bills in as of that date. The amount is going to be, in this case, $648. The bill will be the default, no terms, no memo. Utilities pulled up automatically from the last time we have done that. That's great. That's what we want. That's typically going to be correct, as it does do that default. Utilities, another item that no matter what type of business we choose within QuickBooks, and QuickBooks then generates a chart of accounts for us, will typically include some type of utilities expense. So that's not one that we will usually have to add if we select one of QuickBooks pre-prepared chart of accounts. Once we enter this, what's going to happen? Accounts payable is going to go up from the bill. Specifically, the vendor of Edison will go up. We will owe money to Edison. And the other side of it will be an increase in the utilities expense for Edison, and that will decrease net income. Let's check that out. We're going to say save and close. We'll go back to the balance sheet, and we're looking at the accounts payable once again, double clicking on accounts payable, scrolling down, last item, Edison, double clicking on utilities. There's the bill. Closing this back out. Closing this back out, we can then go to the vendor balance detail, which apparently I closed, and will now reopen by going to reports, going to vendor and payable, and vendor balance detail. We then see the Edison here. There's the bill, $365, double clicking on that. We see the item of $365 in the bill one more time. And we will do this again one more time in the profit and loss, the income statement type account from QuickBooks. We then go down to the utilities. That's where we put the utilities bill for Edison. Double clicking on that line item, we see the $648. Double clicking on that, once again, our bill. What we're going to do now is we're going to pay all these. I'm closing this out, going back to the Home tab, just to show the payment process all at one time. So I'm going to select the pay bills, and we're going to pay all those at this point in time. Now, depending on the terms, we might just want to pay some of them at some points and not all of them. If we were to pay all of them, we could just have written the check, but this bill icon runs it through accounts payable. It gives us another kind of line item, another audit check within there, and it also allows us to pay all the checks at one time. So we're going to go to the pay bills here, and we're going to select those that need to be paid. So I'm going to just select the ones that we have just created. Now note the options here that we have. We have due before a certain time period. That could limit the amount of options we have, and that could be useful if we are managing a lot of payables. And if we're working in the AP department, we very likely might have a lot of payables we're trying to manage and trying to decide how best to manage our cash flow, and this due date period could help with that. We could also have different filtering options that could help us as well. Sort by, so rather than sorting by date, we might want to sort by amount and try to see and look through this report in terms of the amount due or any other type of issue or any type of column or line item that we would want to sort from. And so this field may not be blank. I'm going to say all. All right. So, and if we see that drop down, that's going to be the drop down, of course, of these that we could then sort by these header amounts here. So then we're going to, once again, I've unselected those in some way, so I'm going to reselect those. And then down here, we're going to keep all this constant. We're going to say the date is going to be of the check as of 2/28. That's when we write the check. It's going to be coming out of the checking account. And we're not going to print the checks, but if we were to print the checks, we would have to have pre-printed checks that we would then put into the printer in accordance with the proper format in terms of which way they go in the printer. Make sure you have that straight. And then you can print the checks, and once we do this, it'll print the checks for us. What we're going to do is assign the check number here, just entering the data, tracking the data within QuickBooks so that it will then populate the information into our financial statements. So I'm going to say pay selected bills. And it says, I'm going to go ahead and click Let QuickBooks assign the check numbers. And it should then assign the check numbers in the next sequence that are due within the check numbers. And so it'll assign those out for the 3 checks. And we're going to say, oh, and of course that should match our physical checks that we write. So if we're writing the checks in an outside checkbook, we would want to then match up these checks to the actual checks that are being put into the checkbook to here. And say OK. That then populates. I'm going to close this. What should that have done when we pay the bills? Then of course cash is going down by those checks that we have written, and the accounts payable is going down, representing the fact that we do not owe those particular vendors anymore, and the vendor detail will go down for the particular vendors, being in this case Edison, Spectrum, and Verizon. Let's see if that is the case. Going to the balance sheet first, taking a look first of all at the checking account, the one that's most obvious because we wrote checks. If we double click on that item, scroll down to the bottom, we see the 3 checks we have written, Edison, Spectrum, Verizon, the check numbers being assigned, 1020, 1021, 1022, does look like it is in sequence with prior checks we have been writing. If we double click on any of them, we see the check being created. This screen we haven't seen before when we generated the checks because we used the pay bill icon. But when the thing we actually made, of course, was the check when we paid the bills. This is the driving form. We would have the same for Spectrum and Verizon here. We also may want to look at that in the checking account register, which we have open over here as well, because we might be used to the register. I know I am. So here's our register. And instead of just having the plain check here, we have the pay bill item, even though it is a check. If we double click on it, we see that check and close that out. That little item will just tell us that it did go through accounts payable. It did go through the pay bill item. Then we're going to go back to the balance sheet. Going to scroll down to the liability of accounts payable. This then should be the other side of this transaction. Double clicking, zooming in on that item. We see Edison, Spectrum, Verizon, other side, checking account, checks being created. Let's then look this time at Spectrum. Double clicking on Spectrum, we see the bill for, or the check for Spectrum here, reducing the accounts payable. Closing this, closing that. We should also see this in the vendor balance detail. Clicking the vendor balance detail, if we see Edison, here's the check that was paid for Edison, bringing the balance down to 0. If we scroll down to Spectrum, here's the check paid, bringing us down to 0. Verizon, check paid, bringing us down to 0 there as well. Note that there's no effect on the profit and loss at the point in time that the check is paid because we recorded the expense prior when entering the bill. Be on the financials, but we need to know how it's put together so that we can troubleshoot problems with it.